Hey everyone, this is Robert Keens with goldsilverpros.com, and I'm here with John Lee, chairman of Silver Elephant Mining Corp. John, tell us who you are and what your target market is.
Yeah, Robert, good morning. It's great to be on your show for the first time. At Silver Elephant, we are a silver exploration company listed on the Toronto Stock Exchange main board. And we target equity investors who want to own as much silver in the ground as possible.
Okay. How do you compete in the marketplace, John?
Yeah, Robert, we specialize in silver exploration. We don't do copper, base metals, or lithium or cobalt. And we have a team of highly qualified exploration geologists that scout for silver prospects, and we develop them, we drill them, we add resources, and that's how we add shareholder value.
Okay. And how is your mining project different from others?
Yeah, I mean, Robert, since recently, there's a lot of keen interest into the gold and silver mining space. And within the silver space, there are about 50 companies altogether. Our project is a bit different gravy, Robert. Our flagship project's name is Pulicayo. It's in Bolivia. It is the second largest mine on record based on 670 million ounces of historical production. Mm-hmm. We have proved up over 57 million ounces so far based on 90,000 meters of drilling. However, the drilling occurred only on 30% of the known mineralized 3-kilometer belt. And also we only drilled down to 300 meters, and the mineralization of the mine is known to extend to 1 kilometer at depth. So with additional drilling, we can potentially increase the resource significantly. And recently, we just acquired another project called ELEF.to, of which we just put out the news release this morning. The rig is turning as of today, so quite excited. Mm-hmm. And that project features quite rare intercept of about 94 meters of 1 gram gold equivalent. And that's about 0.5 grams of gold, 22 grams of silver, and byproduct 1% lead and zinc. The deposit is 1 kilometer strike, and 2,200 meter in width, and it's open at depth. We believe that with the additional drilling, which is started today, we can gradually expand the size of the deposit, and I wouldn't be surprised to come up with 30 to 50 million tons of resource, and that will be well over 1 million ounces silver equivalent. In the end, our objective for the company is to prove up 100 to 200 million ounces of resource in the ground within the next 12 to 18 months.
Okay. What's your take on the recent correction in the silver price?
Yeah, Robert, I've been in the mining industry for 15 years. And I just had talked a little briefly prior to the recording that I graduated from Rice University mm-hmm. in engineering economics. I spent 5 years in the Silicon Valley before I retired in year 2000, and the timing was very succinct, mm-hmm. and then got into the mining business. What we're witnessing now, Robert, is I think is truly extraordinary in that the gold had just taken out its all-time high of $1,950, and mm-hmm. that was seems so long ago, but it was only 3 weeks ago. And gold responded by going up to 2,100 in a very short order. Typically, when you pass a flat resistance, a strong, heavy resistance of all-time high, you will shoot up, and then it's not unusual for the market to correct, and the action is very swift and violent. So it seems like gold went up around 10% from 1,900 to 2,100, and it's gone back to test the 1,950 support. It seems to have successfully tested, and now we're hovering around that $1,900 level. And for silver, very similarly, it broke out of a 7-year consolidation pattern at around $20 neckline, and it's zoned up to $30. I think it's more than anybody had expected, which is a 50% gain within the short order. And so it's not unusual, and it's expected to see that a bit of retracement of the gains back to the support level, which is the $22 to $24 level. And silver last week went from 30 to 24 in 48 hours. Again, it seems to have successfully retested that $22 to $24 support level. I would say that right now we're not out of the woods completely, and today's August the 19th, and I would say if gold were to hang around 2,000 and silver to be over 26 for another week or two before the big money come back from the Hamptons, before the traders settle back in their desk. When they see that $2,000 print, when they see that $28 print on silver, I think you're going to see both market resume their bull market. So it's not unexpected, and investors should really be prepared. And last point, I just want to point out that in absolute terms, you might see, hey, $2 silver swings. I've never seen that before in the last 8 years, but 5% of $15 is $1. I mean, a dollar swing in $15 silver is the same as $2 silver swing at a $30 silver in percentage terms. So what we're witnessing is it's not anything abnormal.
Yeah. So what about Bolivia? Is it a safe place to mine?
Yeah, Robert, our team has been in Bolivia since 2005. And I first visited the country in 2005, before Evo Morales came on. That's the socialist president. He came on in 2007. And during those intervening years, in the last 15 years, our team has been operating on the project without any government interference. And the reason for that, Robert, is I also put my boots on the ground for living 3 years in Bolivia. Never felt threatened in any way. It's a very safe, conservative country. And we're able to operate peacefully because we have a very strong local community relationship. We're the largest employer of the town of Pulicayo, and Pulicayo is a town of mining tradition. And and now Evo has fled the country after 15 years of reign, and the country has a new pro-free market government. It's pro-free market economy. It's firmly aligned with the camps of Peru and Colombia and Brazil. And United States is planning to open the U.S. embassy for the first time in Bolivia in over a decade. As an investor, I tend to look at forward, right? Not from the rear view mirror. And Bolivia, I think, is a overlooked investment destination that welcomes foreign investment, and with the very well endowed geological potential, with the risk that's very manageable. And we are very keen on Bolivia going forward.
Okay. So what is about Silver Elephant that would make people want to buy it now?
Yeah, well, Robert, people buy Silver Elephant for leverage to silver prices. So we're the leverage. If you think about buying those ETFs that are leveraged and whatnot, we're another form of leverage silver investment. And plus the optionality, because we have tens of million ounces in the ground. If we can just go back to the fundamentals for silver for a minute. I mean, Jay Powell a month and a half ago had made no secret and made it very clear that interest rate is going to stay zero for the next 2 to 3 years at the very minimum. So the cat's out of the bag. It's just the market takes a little time to digest that information. And you have QE infinity, and the Powell camp and Trump camp has made it very clear that they will stay, the policy, both monetary and physical, will stay very accommodative in the foreseeable future. And QE infinity, the Fed's balance sheet has gone from $3 trillion to $7 trillion. The deficit is going at about $1 trillion every quarter, and with no end in sight. Trump is talking about another stimulus checks and tax on income tax and capital gains. And then on the geopolitics front, you have the trade war going on, but then you have the India-China dispute, the border dispute. You have what's going on in Hong Kong, North Korea, and a bunch is set off in Lebanon. So the fundamentals couldn't be more stronger. And then you marry with that today, only around 1 to 2% of the investment capitals are in the precious metals. So you are now in a very rarefied camp of investors that are in the space today. Fundamentals couldn't be more bullish, and we're only at the beginning. And then technically, as I mentioned earlier, gold has broken out its all-time high, and there's a massive saucer shape from 2011 at 1800. Today we're 2000, and so if you look at technically, draw a horizontal neckline of 1900, and the bottom for silver last 10 years is about 1,000. So if you add 900 to 2,000 today, and you'd be looking at a reasonable price target for gold of 2,900 to 3,000. And then if you trace back to 2011, when gold was 1,800, silver was 50, right? So the gold to silver ratio at the time was about 30. You apply a 30 ratio to a $3,000 gold target, you get to a silver price of approximately $100. Exactly the path from here, $28 to there, $100 approximately, we don't know. But technically, fundamentally, extremely bullish. And then technically, we're at the very, as a trader, as an investor, you want to be selling at 20% from the top. You want to be getting in 20% from the bottom. So I think we're not even 10% from the bottom. Presents really a very ideal entry point. And not surprisingly, you see the news from Warren Buffett, who just established a $500 million position in Barrick, which he has another $99 billion and $500 million to spare. And and actually authored quite a bit of video at YouTube recently. I wrote an article, video letter in July. When silver's 18, I forecasted $32 silver by the end of the year. I think we're on track to doing that, maybe as early as September, if gold would be above 2,000. And I also authored a letter to Warren Buffett in June. And I say, hey, you sold the bank stock, you sold the airline stocks, you get all this money, and equity market is no bleeding territories. What are you going to do with your money? And you know, it's very opportune that he actually went ahead and bought gold mining shares. And I think that it's almost a foregone conclusion that he's going to buy gold. So to come, you have to be bullish to go to buy gold mining shares. And if you're going to buy both, you will buy shares logically first, then to buy gold. Otherwise, you'll be shooting yourself in the foot.
Anything else you'd like to add?
Yeah, I think, Robert, well, it's good to be on your show for the first time. A little bit of research on your channel. And I think for those of your audience that are potentially new or maybe new to the silver mining space, I just want to mention that the company is backed by billionaire Eric Sprott, who's one of the marquee investor in Toronto. We're also backed by a couple of very prominent funds in the United States as well as Australia. The company is managed by veterans from mining companies Hecla and Barrick. These are the monolith big mining companies. Insiders and institutions own 35% of the companies, so we have a lot of skin in the game. Talking about Sprott, he just announced recently his intention to buy $1.5 billion of silver physical. So the genie is squeezing the bottle. And as I said, Silver Elephant presents a leveraged play on rising silver prices. And I think now is a pretty good time to establish an entry position if you haven't. And we're ideally suited for retail investors and an entry-level position for institutional investors as well. Just under $100 million market cap with a very, very healthy trading liquidity at about $1 million a day.
John, thank you very much for sharing all that with us. Subscribe to our channel and stay tuned for the full interview next week.
My pleasure. Thank you.
Thank you.